Hi, and welcome to the Market Alert for Friday, the 25th of March 2022. So yesterday, Bitcoin bullion, big tech bond yields rise as crude crumbles. It didn't crumble that much. It was just down $3 by the end. Global bonds, largest drawdown on record, and VIX is cheapest since 2020. Yield curve most recessionary since 2000. Well, yeah, absolutely. I mean, they're certainly going to end up with a recession, if not a depression going forward. Yesterday, this was an interesting one. PM eyes Putin's gold as a target as he compares Zelensky to Churchill for giving Ukraine its roar. I don't know how they're going to pull this one off, but then Yellen entered the fray as well. We'll discuss sanctions on Russian gold with lawmakers. So it's at the moment it's just a discussion. Yeah, interesting. Very interesting, that one. I mean, there's no ends to these sanctions, but the problem is, as I've said before, it only impacts upon the people, which I'll come to in just a moment. Russia is to open selling natural gas for Bitcoin and gold. This man is not stupid. He would be fully aware of the sanctions that were going to be imposed upon him, and is now selling natural gas invoicing in rubles and Bitcoin and gold. And at the moment, he's still allowed to do whatever he wants with the gold because I don't know how the international community could actually seize the gold, which would be impossible. But probably sanctions to stop him from actually selling it. But people could still pay in gold. It's all a mess, isn't it, on the financial side of these sanctions? Because ultimately, as this moron says, that Biden casually says food shortages are going to be real as necessary price of anti-Russian sanctions. And it's the people, the likes of you and I, that we're the ones that are going to suffer because of these sanctions. With rising food prices, which we've already seen for the last year, they're just going to go vertical. The price of sanctions is not just imposed upon Russia, it is imposed upon an awful lot of countries, as well as including European countries and our country as well. And it's all right for the elite, of course, because it's not going to affect them. But those that are already on the old adage of the breadline, well, I dread to think. I really genuinely dread to think how it's going to impact upon these people. So, yeah, we'll have to see. It's just madness, isn't it? The world is utterly mad at the moment. Today, GPB, we've got retail sales at 7 a.m., German info and revised UM consumer sentiment coming out of the US at 2 p.m. This weekend, the clocks go forward in the UK. We're all back to normal next week. 2:30 kickoff for the Dow. And speaking of the Dow, let's have a look, see where it's trading. Yesterday, the market managing to move back to the upside after the reversal to the downside, as we spoke of in the market alert. Keep that channel and also get through this 89.78 and 89 here and make our way back to the all-time highs, because that's the goal and objective. So stuck in the sideways range. There is no economic news to move the market today, so it's going to have to be some sort of ceasefire news. We've not had any this week, have we? It's been rather quiet on that front, so we're due for a day where there could be some sort of ceasefire news just to set the markets alight on the upside. Yesterday afternoon, we saw the market open at the close just above the low and continue in that direction for the session, apart from hitting the 200 MA, then coming back, finding support at the DP level before then moving to the upside. In the German DAX, similar picture. We've got a lot of demand for yesterday. Trying to hold the market in the sideways range as well, looking slightly weaker than the Dow, but still stuck in that sideways range. A lot less volatility yesterday. You can see this due to the range of the bar moving quite well. It looks very narrow compared to what we've seen of late. So a bit of calming there in the market, but like I say, to get through these highs, we need to see some sort of ceasefire that will trigger it. Whether it's real or not is irrelevant. None of the others have been real or come to fruition. It's not about that. It's about getting the market back up and keeping the normality that we saw before, if that's such a word anymore. And in the 30-minute DAX, a bit choppy yesterday. We saw the market come off the low in the overnight market, traded up through to the DP, through to the 200 MA, and then the market failed there in the cash market and sold off. Again, that pattern of bringing the prices up and valuations up by using futures contracts. When the cash market opens, they want to offload a big position, they can do, and then you'll see the market then retrace before the Dow opened and then sideways. It wasn't a big day yesterday, as we say. That's 100, about 180 points to the high there. So a quick look at the 5 minutes as we kicked off yesterday morning. The futures market rallied up to the DP level, then pulled back to the 50 bar. And again, we had that same volatility when we kicked off on the open, managing to break to the upside, stopped at the BRN, and then the market started to break down, as we can see there, all the way down till it became really oversold at the close and at the low. The low is very important, as we've said on many occasions, and you can see there the market finding support in this area at the low. Then the market bounced off this. So then I don't know what this is. There's obviously some news that broke. Oh, that was the gold. That was the announcement on Boris and Yellen wanting to seize the gold or create some sort of a sanction against Russia using the gold. And we see the market then just drift sideways as it drifted lower again down to the close. And interestingly enough, as the momentum was starting to move up, we were moving down. And we've got divergence there that was highlighted, and then the market moved up with the Dow. But not a very big day range-wise. And overnight, fairly quiet as well, as you can see there, only within a 50-point range where we've had 100 points on the overnight. Quick look at the yen. This moving to the upside still in the daily chart. Bit of supply yesterday. We are overbought. We are due for some sort of consolidation and a pullback before the market can move higher. And in the 30-minute chart, we see a bit of a pullback there overnight down to the S1, oversold, divergence, and now starting to make its way back to the upside there. In the pound, we've got this also showing demand for yesterday and attempting to move higher overnight. Dollar down slightly, and prices need to take out these upside targets if they are to continue to move to the upside. But I would expect today they'll try and support the US dollar. We'll see why I say that in just a moment. In the 30-minute pound, very choppy yesterday, oversold at the start, and then moved to the overbought at the close before then moving back. And then again, the reaction to Boris's announcement about seizing and or trying to take some form of control or embargo on Russia with its gold, and then eventually discounting this and moving back to the upside. But again, very quiet for the pound as well. All the activity yesterday was in the metals markets, and you can see that silver had a big day up yesterday. It's going to have a big day down today as well. Without a doubt, there is no way they're going to let this go up from this point. And that's because Bank of America has to report to the OCO this time next week. Well, I think it's Wednesday of next week, what positions they still have open on this 800 million ounce short position. So this is going to get slammed between now and then. Yesterday, the market moved upon news. That news is not confirmed, and therefore this is open to be moved lower. And even as I'm recording, you can see that this is started. When it starts early in this market, we know we're going to end up down here by the end of today. That's the way that it works. But yesterday, the market moved up nicely, and overnight managed to hold, but now they're selling this market quite aggressively. If I look at the smaller time frame on the other screen, it's already down to 25.54. So if it doesn't hold at the DP, we go down to here to yesterday's low, and I wouldn't be at all surprised if they managed to monkey hammer the price of silver down to this level, purely and simply because, as I say, there's this massive short position, 1 year lease of silver, which is not of the physical silver. it's well, not it is, but it's backed by paper futures, which is really bizarre, really. So they're long the metal but short the futures, and they want the price down. And you can see it's dropping as I actually record. In fact, let me just grab you a quick 5-minute chart on this so you can see how aggressively it's already being moved to the downside. It's not unusual, and don't be surprised if there's another billion ounces of paper silver sold today in this market. Unless, again, something comes out where they actually manage to impose these sanctions, but you can see there how quickly they're managing to move this market down to that DP level. Like I say, if you break the DP, we go down to yesterday's low in a heartbeat, because that's going to be the goal. I'm not being pessimistic, that's the reality, and that's how it's been for the last goodness knows how many years since JP Morgan picked up all of the silver from the collapse of Bear Stearns. It's all available on the internet to actually read and research, so they need to monkey hammer the price back down to around 22 to offload this 1-year lease with the Bank of America position. On the gold side, or the gold front, you can see that the reaction wasn't really that terrific compared to silver. Silver taking and seizing the opportunity to move higher, but like I say, it's going to pay for it today. And so is gold. That will be hammered back down as well during today's session. Meanwhile, the dollar had a bit of a move to the downside, but finding support at the 5 MA. And crude oil wasn't really that hammered personally. I don't think it was that bad. Let's just have a quick look at the range on this high 123, low 116, $7 range. Not a big deal these days in the oil market, and already making its way back up to 119. So recovered $3 already to move back to the upside. Okay, I think that's it. It's been another interesting week, and certainly yesterday with this announcement on trying to bring sanctions against Russia's gold, and considering that gold is perceived by most as an old relic, or it's not significant anymore, it's interesting to see that the central banks and the UK want to actually stop Russia using it to their advantage. So there we go. And you never know, he may have the goal of wanting to underpin his currency with gold as well. So this is probably the main reason why they're trying to stop him having access to it, which I find it impossible to actually do. But there you go. I'm not familiar with international law and such matters, but it just seems really odd how they could actually pull that one off. But then again, it's America, isn't it? So we've seen what they've done in Iraq and Afghanistan and everywhere else, so who knows? And then also 50 years of the petrodollar as well. Anyway, enough of that. Have a great weekend. Clocks go forward. I will see you on Monday. And as ever, thanks for watching. See you in the next one.